Hi, a very good morning to you. It's nice to see you after a week. And yes, while we have the show today, you must also watch a weekly podcast with a bigger one, the 15-minute one, which is on the cough syrup deaths and what it means for India and its policymakers and for the health of the rest of the country. You must watch it. Anyway, as always, Saturday is a day when we look at the week's news and pick up three stories that we think idea characterize the week and which are important and we need to discuss that. And my co-anchors today are Katya Naidu. Welcome, Katya. And I have Janvi, Hussaina, and Saloni. Welcome, all the three of you. It's good to have you here. Together, we're going to talk about three different titles, and the titles can be seen on the screen. The first one is about oil, the slippery stuff which Latin America calls the devil's excrement, and what it's doing to the world. The second story is basically on something even more vexatious, on Vodafone's dues and what its implications could be. And the third story is on the automobile policy that the government has. All the three stories have many, many policy implications, and we'll try to analyze all of them. Let's go to the first one. Can we discuss the oil story? Hussaina, could you come in?
Yes, sir. So, as you rightly said, the slippery stuff, the Russian oil are once again in the news, and the recent data shows a sharp drop in Russia's oil exports to India, marking the first clear signs of pullback after the US sanctions on Moscow's major oil companies, Rosneft and Lukoil, which were announced on October 22nd. Now, according to global vessel tracking data from Kepler, in the week ending, which is October 27, Russian crude oil exports to India fell to 1.19 million barrels per day, which, let me put it into perspective, is nearly half of the 1.95 million barrels recorded in the previous 2 weeks. So the question arises is what is behind this sudden fall? The US sanctions, of course, which will take effect from November 21, target Rosneft and Lukoil, which together supply over two-thirds of India's Russian oil imports. Now, beyond banning US entities from dealing with them, these sanctions also carry the threat of secondary penalties, again discouraging other nations and companies from trading with Russia to avoid being blacklisted by Washington. And as a result, Indian refiners like SPCL, Mittal, and Indian Oil Corporation, they've already started scaling down Russian imports. While Reliance Industries, which again is India's largest private refiner, they are carefully assessing the compliance risks. Also, a fact that given that tankers take weeks to arrive via the Suez Canal, analysts expect the full impact to be visible by late November. Still, a complete halt seems unlikely because Russia remains India's single supplier as well, which accounts for around 35% of its total oil imports. And some shipments are likely to continue through third party intermediaries. Now, to offset the decline, Indian refiners are expected to ramp up sourcing from Latin America, West Africa, and of course the Middle East, especially Brazil and Saudi Arabia. Now, this diversification could mean higher cost in the short term, but may help reduce dependence on Russian crude over the time. Also, so there's a wider context here. Because OPEC Plus has raised its oil output targets by 2.9 million barrels per day since April, a move that I think could partially cushion the market impact of shrinking Russian supplies. But again, what do you think, sir?
Interesting times for oil, but what people don't realize is that all these sanctions against oil could have another purpose. It is not to discourage Russia as much as to promote the sale of American oil. America has been talking about drill, baby, drill. It's producing oil but needs buyers and it needs the prices to go up. Watch how he's attacked Russia with secondary sanctions. He's attacking Venezuela with one of the largest
Yes.
reserves of oil. And now, just yesterday, we started attacking Nigeria also. The idea is to stop the sources of oil one way or the other so that there's a demand for American oil and for oil from the Middle East, where America is an equity partner. It's a messy situation where you create global chaos just to promote an American interest. All the theories about containing Russia seem to be just a band-aid over what is likely to become a big gashing wound. At present, India's capitulated. China, not so because it's got pipelines. Hungary is having talks with Trump to explain why he needs Russian oil, and there's no way he can survive without it. So we do not, and EU may also decide to opt for Russian energy for gas and oil. So we do not know how these sanctions will work. Let's see. But interesting times. Katya, any views on this?
So if we actually accede to Trump's demands and then pull back Russian oil and then buy more expensive oil, we will go into a deeper economic problem than we currently are, sir. Because already we've seen the worst end of the tax, of the tariffs. Our exports have gone down substantially. We have not been able to supplant it with other exports to other countries. So our anyway the worst we have seen the worst end of the stick. Now we'll see the other end of the stick too. So that we'll be in a double problem. We already are in one. So that's
Let's
my
see.
opinion.
But yes, Varasam. Let's see the second story. The second story is equally interesting, and that's by January on Vodafone or VI. January, can you come in?
So the Supreme Court has handed Vodafone India a potential lifeline because its latest ruling has given VI a breather in its long-running battle over adjusted gross revenue or AGR dues. The court has allowed the government to re-examine VI's dues up to the financial year of 2016 to 17, instead of limiting it to a small additional demand of 9,450 crores. So markets have responded well, with VI stocks surging over 9% in just a single day, joined by a rally across Indus Towers, HCL. So investors do sense a little relief. And that did open up a small window for VI, which was saddled with over 83,000 crores in liabilities. And it was practically struggling to survive. And there's also the fact that if VI were to collapse, then we'll just be left with a duopoly with Geo and Airtel, which isn't very healthy for either pricing or consumer choice. And the verdict gives the government flexibility to reconsider how much VI actually owes. And it also designs a relief framework that keeps Vodafone, which is India's third major telecom player, afloat in the industry. But the order also makes it clear that the relief applies only to VI. But then now you have, Airtel's managing director Gopal Vittal, who says that the company will approach the Department of Telecommunications to seek a similar reassessment for Airtel as well. And Airtel argues that even calculation errors in its AGR dues, which is now close to 44,000 crores, were also never entertained earlier. So, yes, sir, what is your take on that?
Well, the government had a wrong policy on spectrum pricing in AGR. Now it wants to have a worse policy by allowing only relief to only one company, which could have consequences. But Katya, what are your views on this?
So it has been flawed from the start. So the reasons of when the AGR dues came in, it was a
Yes.
very delayed, a decades-old case. So there was basically it is a conflict between how telecom companies calculated revenue to what the government felt this is how they should give. So and all these things were happening. The entire case went on for over a decade. So all the AGR dues plus the interest was accumulated. A lot of experts said, please let the interest go, because the fact that it's been delayed is not the telecom company's mistake. That's how the legal process works. So if let them pay the dues and let it be on with it. Vodafone got the worst end of the stick because it's two companies merged. Idea's AGR dues, Vodafone India's ADI dues had accumulated. There is no way a company would survive it. So this is flawed telecom policy of the telecom policy has always been flawed in this country. For one, when there was 2G spectrum auction, it was a ridiculous one of who stands in line, etc. That is how the 2G issue happened. Then 3G was when it was bid out. When they made a lot of money, people went and said, "Arey, we should have actually not given 2G licenses so easily," and then they retrospectively changed the law and cancelled all the people. All the foreign companies, all the Indian companies that invested in good faith, thinking that they have been given a license, have been hoodwinked. So very few people have made money in telecom. So even currently, right now, the amortization cost, amortized spectrum asset which we have to pay off, is extremely expensive. Very few companies would be able to survive at the current prices. We have the lowest internet rates in the world, and we have the most flawed telecom policy in the world.
Very
So which
flawed,
is
very flawed. Thank you. Thanks, Katya. And we take the third story now. And the third story is on on automobiles. Saloni, can you come and explain to us the automobile story?
Sure, sir. So major EV makers have raised strong objections during internal industry discussions over the proposed corporate average fuel efficiency CAFE norms. So, arguing that the Bureau of Energy Efficiencies, which is BEE, revised draft offers undue advantages to flex fuel and strong hybrid cars. So, when both technologies are combined in a single model, according to them, the numerical benefits compound, allowing such vehicles to display carbon dioxide emissions far closer to those of EVs in compliance calculations. So, EV manufacturers point out that converting a regular petrol car into a flex fuel vehicle requires only about rupees 17,000 to rupees 25,000 per unit, according to a Niti Aayog report from June 2021. Whereas, on the other hand, developing an EV demands vastly greater investments in research, battery development, and localization. An executive at a major EV maker said that these relaxations in draft CAFE norms for strong hybrids and flex fuel effectively reduce the compliance gap between EVs and other powertrains, which makes it harder to justify the capital intensive transition to full electric technology. On 7th June 2024, the BEE published the first draft of the upcoming CAFE 3 and CAFE 4 norms, which are to be implemented between April 2027 and March 2023. So, the Society of Indian Automobile Manufacturers (SIAM) submitted its documents in December 2024, requesting certain changes. A few months later, Maruti Suzuki approached the BEE seeking relief for small cars through weight-based exemptions. The BEE issued a revised draft on September 25 this year, granting that relief by introducing a weight-based exemptions for the first time. Under the revision, petrol vehicles weighing up to 909 kg with engine capacity below 1200 cc and length under 4000 millimeter will get an additional 3 gram per kilometer deduction in the declared carbon dioxide emissions. The discussion around such weight based exemptions had already split the industry. Since earlier this year, the BEE's latest draft proposing further relief for strong hybrid and flex fuel vehicles has deepened this divide even further. As a result, SIAM has yet to inform a composite industry position to submit to the BEE. What's your take on this, sir?
Once again, thanks, Saloni. A good story. Once again, we have a situation of flip flop, the inability to think cogently, the inability to form a proper policy. One day you talk about blended fuel, another day you talk about EVs, one day you talk about corn, another day you talk about sugarcane, one day you talk about battery charging at individual houses, another time you talk about swapping batteries. Why can't you sit down and create one policy so the industry can plan properly for the future? Again, it's a mess. You are hurting India, you're hurting manufacturers, indirectly, you're hurting consumers because now they have to pay a heavy cost for the delays, for the additional capital costs, and that is going to hurt consumers, the country, and companies. Katya, any views on that?
So, so actually, the whole number of hybrids are also very, very confusing. So, a lot of the transit that happens is actually mostly, truck-based one, which is yet to adapt to the new age one. So I don't think it's having a spectacular effect on air quality as well, which is the intention. In fact, air quality has been constantly going down. So I don't know. So that is how we much judge it. And doesn't seem very interesting to me.
No, thanks, Katya. And that brings us to the end of today's session. Yes, and just a reminder before I go on to question to responding to at least one comment, uh, please click the subscribe button. Please click the like button. It helps us immensely. But most important, please tell all your friends about this program that does a weekly analysis of news as well. And while we are talking, I can see one comment coming in. What do we expect from oil? Don't expect anything. Anything can happen. The fact is that India has capitulated America, so India will have to pay a higher price. Will India be able to stand up? Unlikely. Because India still depends heavily on the West. It does not develop markets in other parts of the world. And that takes me to the last question before we sign off, because we've already gone beyond the time limit. What do we expect on vehicles? Vehicles is a messy subject. Yes, manufacturers, the big manufacturers, have resilience, they can survive, but all of them are proceeding carefully, very, very carefully. They are not adopting new they're not taking up new technology because they never know when the government's policy will change. So everything is half-hearted, everything is tentative. The mainstream continues, consumers are confused, the markets are confused because the government itself is confused. And that takes me to the end of today's session. Have a lovely weekend. And thereafter, have a very profitable, successful week till we meet again next Saturday. Do log in. We would love to see you again. Take care. Good luck.